Ready, start. Mr. Speaker, sir, having addressed legacy issues, public sector banks are now proposed to be further provided 70,000 crore capital to boost credit for a strong impetus to the economy to further improve ease of living. They will leverage technology offering online personal loans and doorstep banking and enabling customers of one public sector bank to access services across all public sector banks. In addition, government will initiate steps to empower account holders to remedy the current situation in which they do not have control over deposit of cash by others in their accounts. Reforms will also be undertaken to strengthen governance in public sector banks. Non-banking financial companies are playing an extremely important role in sustaining consumption demand as well as capital formation in small and medium industrial segment. NBFCs that are fundamentally sound should continue to get funding from banks and mutual funds without being unduly risk averse for purchase of high rated pooled assets of financially sound NBFCs amounting to a total of rupees 1 lakh crore during the current financial year. Government will provide one time 6 months partial credit guarantee to public sector banks for first loss of up to 10%. Further, Reserve Bank of India is the regulator for NBFCs. However, RBI has limited regulatory authority over NBFCs. Appropriate proposals for strengthening the regulatory authority of RBI over NBFCs are being placed in the finance bill para. NBFCs which do public placement of debt have to maintain a debenture redemption reserve and in addition a special reserve as required by RBI has also to be maintained to allow NBFCs to raise funds in public issues. The requirement of creating a DRR which is currently applicable for only public issues as private placements are exempt will be done away with to bring more participants, especially NBFCs not registered as NBFCs factor on the regulatory platform amendment in the Factoring Regulation Act 2011 is necessary and steps will be taken to allow all NBFCs to directly participate on the regulatory platform. Efficient and conducive regulation of the housing sector is extremely important in our context. The National Housing Bank is also regulator of the housing finance sector.